friends, welcome to the show. It is bright, sunny, and actually not as hot as we've had recently.
Definitely not.
And we have the sunny Scotty Ben joining us today.
Everybody. Good morning.
Yeah,
good morning.
we've got an upgrade from Rich.
Well, let the subscriber numbers tell the story. Let the subscribers tell the story.
Good morning, Gavin Ackers and Kirky as well. Morning to you, Monkey Man. You finish your exercises. He does his exercises before watching the show.
Excellent. Good focus.
That's what we like to know. Wing It as well, saying great presentation in Milan. Also made more interesting with oil crashing and the markets rising in real time. Kept Rich on his toes. That's right, Wing It. You saw it here first last week. We were talking about shorting oil with Dylan Rattigan. Dylan, of course, also in Milan. Carlo, good morning. And Andrew McKelvey too. Maturin, how are things on the Discord channel? Do let us know. And Maturin also is the master of the Discord channel that was
yes, I must actually invite myself onto that. I've heard it's very good, so yeah. I'm looking forward to that.
Cool. Julian, good morning to you too. I saw your email yesterday. I will reply to you. It's just been a bit, as you know, tricky and also interesting, shall we say, because we are covering all bases with all this happening and Rich away, right? Scotty is with us.
Yeah. And me turning up late, thanks to our friends at London Underground, so yeah. It's going to be a bit scatty this morning.
Very good having you on. Let's first of all get our trader friends up to date with what's happened. I've crunched some numbers, came in early again today to crunch some numbers for you. Let's just put my, we'll get a chart up for you to tell you where we are across the Iran-Israel-US situation. But let's take a look at the coming up first with Scotty.
Okay,
right.
We got this morning. Right, overnight action with Angeline and I.
Yeah.
The famous opening bell. Still waiting for our sponsor to come through.
Maybe
it could be a certain food company. You never know.
Yeah.
We'll take anybody. Rich, live from Milan again. I wonder, has he got new sunglasses on today? Because Rich does love a pair of sunglasses. And then live from the trade desk with Angeline and Matt Arbour, who, I don't know if you know, I used to work with Matt's brother.
Really?
Yes, I did.
He has a brother?
He has a brother, Andrew. His nickname was Tree, which is a fairly loose pronunciation of Arbor. But yeah, and then at 9 o'clock, all sessions opening bell, Macro Minute with Aaron and Martin, and then Trader Tools with Angeline and Jolie. That would be a great way to wrap up the show. Yeah,
we take a look at how to, if you want to place a trade, spread bet CFD style, but also Jolie's on with me too to give you a way to hedge or a way to take a very directional stance with options, right?
Excellent.
So
that fits nicely.
Yeah. So let's have a quick look at the chart that I came in earlier to crunch up for you guys. Just a really, I've got the gallery going F11. We need this to be automated, people. It needs to know the moment I'm doing this. Right. So just a quick look at this, and I'm going to try and zoom in for you. It's been coined by Trump as the 12-day war. Mm-hmm. I'm sure that all of you have been across, what he's been saying, but, there's a timeline on the left. June 13th is when Israel first launched its preemptive strike on Iranian nuclear facilities. We covered that, and you heard it here first, trader friends, about how things could change if we saw those bunker busters, and we did see them indeed. A quick count. This is just a rough count. And I took sources. Sources I use include Bloomberg, CNBC as well. And the ceasefire status at the moment, according to Trump, is that it's now in effect. Have you seen anyone else say this? Because I haven't.
Well, I did see, so on CNBC Live, which we do like to look at, which is a great site actually, especially because it's free, which we all like free. It did say that apparently the ceasefire has come into effect today. I don't know exactly what time, but there was a report at about 5:30 this morning about a last flurry of missiles, which I think you've seen there on your key developments. So that last round of missiles, again, I'm not a military expert, but I have worked with people who are, and they've said that's pretty kind of standard practice just to let off a last round as to kind of mark the ceasefire. I mean, again, from now, unfortunately, the West has been attempting to get control of Iran since 1979 when they installed the Ayatollah. So how long will it last? I don't know, but yeah, it appears. And again, looking at how futures have moved from where we looked at them, say, an hour ago when we chatted to where they are now, it looks like it's probably holding for now, or looks to be in place, I would guess.
Yeah, market's suggesting they expect it to hold.
Yeah, absolutely.
What's interesting though, Scotty, is that, other than the Trump's social media, post announcing imminent, I think that it's quote, complete and total ceasefire, there doesn't seem to be anyone else in the space. I haven't seen anything from, the Israeli side. There were comments coming from the Iranian official earlier as well, confirming that Tehran had accepted a ceasefire, but then followed up with saying there would be no stopping of hostilities unless Israel stopped its attacks. So
I can see how that would make sense. And again, in the meantime, they can still be doing things like cyber attacks through the back door, don't forget. So yeah, the overt hostilities that a lot of the news wires like to run might potentially be on hold. But yeah, there's certain other ways of attacking countries at the moment. But
yeah.
I think what is interesting that I did see some of the larger energy companies are still shutting platforms in the Straits of Hormuz, redirecting ships. And again, as the old phrase goes, you can't turn an oil tanker around quickly.
I love that one.
But yeah, I think it's going to take time, especially these energy companies are going to be super, super cautious and not just suddenly rush back in. So yeah, like all initial piece, it's pretty tentative, but let's hope it holds for all those concerned.
Let's hope it holds. And like a super tanker now swinging into the pivot point, producer Phil wants us to go to overnight action. Hello, trader friends. Welcome back with myself and Scotty Byrne here, who's joining us this morning whilst Rich is swanning and living it up in Milan after last night's event. He will come on this morning to let us know how it all went. The pictures looked incredible when they came through. Of course, I have the undeniable pleasure of hosting all of you and taking care of you whilst he is there. He's going to be there rest of this week as well. But let's have a look at some of the front pages, shall we?
Yes, excellent.
So let's start off with CNBC and European stocks. So we talked about this earlier. Looking set, of course, to open higher, to suggest that actually, markets, investors think that the ceasefire will hold.
I mean, they've been pretty much trying to ignore it already, haven't they? As we were discussing in the little break. Yeah, I mean, I think that as we were talking about some of this extra boost from the chatter over the last two trading sessions from a couple of Fed officials looking to not be towing the party line as well about potential rate cuts. Again, at the moment, we're ignoring too much. A lot of the skeptics are saying that we're ignoring everything.
So which do you think it is then? Is it markets being complacent, or do you think it's,
Look, I just think you can't argue against money flows. That's the one thing. But again, I think when you've had no response from the gold price in 2 months now, that's starting to look like a bit of a tired asset. I'm not saying it's necessarily about to go down, but it's definitely looking like a bit of a tired asset at the moment.
We've got to get you on with Simon Popple from the Gold Program. Ooh.
Yeah, look, I mean, it's where positioning is. I mean, so much money's flowed into it. I mean, we're looking where the futures are implying at the moment. We've got, where are we? We've got...
well, they're all slightly higher. And I tell you what was more telling, overnight, all three indices, Wall Street closed sharply higher,
Yeah, I mean, we're pretty much within sniffing distance of that high that we got in February this year. And that's an all-time high on the S&P. So...
Donny One, call out to Donny One. They're saying, fantastic. Now let's get to all-time highs.
Why not?
Yeah.
Why not, right? Absolutely.
I mean, indeed, just if you weren't across it and watching it as I was sort of like horizontal because I was really tired after last week, which was also quite mental.
I can imagine, pretty exhausting.
Dow up 8%, S&P 500 closed up 8%, NASDAQ also up 8%. Consumer discretionary stocks, interestingly enough, also led the gains across, from a sector viewpoint. I mean...
They did. I mean, it shows the positioning. We had numbers out from Kroger intraday on Friday, and they were up 9% on Friday, and then up another 2 yesterday as well. So, I mean, again, they've made a bit of a pivot into more online sales, but again, Walmart and Costco were up yesterday too. So the consumer's coming back, and if there's any sniff of rate cuts, those consumer names have just been pretty beat down.
Do you know I'm a big fan of Kroger's? They are the only outfit there that sell loo roll that is like a 36 pack.
Wow.
Yeah, over in the US.
That's
it's insane.
industrial.
It's insane. And like, yeah, households there buy it. They've got so much space they can store it, right?
Yeah, true.
Yeah.
True.
So you were saying that the most interesting thing you saw yesterday was Bowman. This is the Fed Vice Chair, Michelle Bowman.
That's right.
Saying it is time to consider tweaking that policy rate.
Yeah.
Do you agree? I mean, the job market's been really resilient, Scotty.
Yeah, I mean, wages are going up. I mean, I still go back to a couple of weeks ago, you might remember, where I showed Rich that piece from a company called Stratagas, the Common Man Inflation Index. It's still outpacing wage gains. But, you know, I know that central banks are apolitical, they're independent. Powell is certainly, you can imagine on a personal level, he doesn't want to cut, right?
No.
Because that would bow to Trump. But again, at the same token, if they're talking about it, Fed chair is the Fed chair and he's going to be running things. But when you've got to, and the thing is as well, she's an acknowledged hawk, as is the guy Friday. They are hawks. So, yeah, I mean, it just seems like it's all set up at the moment for certainly a test of all-time highs this week.
And at the same time, it looks like, you know, the whole tariff, you know, tariff attention on that. We talked about this with Matt Arber yesterday as well. Everyone seems to kind of like momentarily forgotten about this, you know, kicked into the long grass maybe.
Well, I think some of the components of what Michelle Bowman was saying yesterday, where effectively she said, are we wrong about the effect of tariffs? Because a lot of people like to take them from that Smoot-Hawley 1928. Again, I'm showing my age now. I wasn't in the market in 1928, which is what Rich would say if he was here. But basically, a lot of people have drawn those comparisons where the last time you had a hike in tariffs that you had was back in the late 1920s, but forgetting that the actual market crash was 1929. So, yeah, maybe we're just drawing the wrong comparisons from history about the effect of tariffs.
Well, Goolsbee definitely said that perhaps the impact might be more modest than thought, right? We are seeing right now trader friends, financial markets trading as if they are expecting at least 2 25 basis point rate cuts before the end of this year. First cut widely expected to happen in September.
Actually, I've got a graph up if the guys want to switch to my laptop screen. That's so this is the regional Fed surveys of prices for New York and Philadelphia. As you can see, that last little tick down, which is the latest set of data for June. So the argument is if they peaked in May, where the stocking or the pre-stocking was taking place, which is perhaps what pushed prices up because of stockpiling, and now the consumers are not rushing to buy, as we've seen from some of the consumer confidence surveys. But yeah, perhaps inflation peaked then. This is a part of the argument, and this is all contained in that piece around some of the things that she was talking about yesterday. Yeah.
Right. So let's have a look at who else has joined. Moscow, WROB1. From the BBC website, the Israeli government says it agreed to a ceasefire proposal after achieving the objectives of its attacks on Iran. Well, Scott and I were just saying, at least from the market viewpoint, that is the expectation that a ceasefire is going to hold. Donny One saying time to exit those oil longs. And Boise, morning Boise, you won yesterday's Guess the Stock. So have you sent me your...
well done.
Yeah, it was a hard one. Have you sent me your address? Because we'll get you a gift sent out from here. Jugga, Guten Morgen. Jugga's from Germany.
Superb.
Right, let's move on to the next one that I want to talk about as well, because there was a solid move higher from Tesla yesterday.
Yes.
You like Tesla? You're a fan of Tesla? I talk about that with Piers quite a lot here.
I mean, I think the cars are extraordinary, but I think unfortunately, like anything, things like infrastructure here is not going to be supportive of having an electric car. So I don't have an electric car. Obviously, the things like the price point are the barrier, but also there was CNBC were a little bit. There's a sub story on CNBC which I included on my newsletter headlines today about even though they were up.
Let's get my screen up, guys.
8% on the on the robo-taxi launch, but apparently there were a couple of instances where the robo-taxi braked in the middle of the street because there were parked cars nearby, and there was another little incident. So again, look, these things are not going to go smooth. In a city like Austin, it's all very well if you want to test them out on the Google campus where there's no traffic. But look, I guess these things are coming, and like anything in the US, they're more open-minded. They're going to test it, and they've got the space to do it. So I think the share price. I was actually having a conversation with a client of mine who's in New Zealand last week, and she actually likes Tesla, but she also understands, as we've been talking about here, it's not just a car company anymore.
No, it's space, it's logistics, it could be defense at some point, if not already, with Starlink. I was joking the other day, but I wouldn't be surprised if we already have warehouses and a Tesco up on the moon somewhere, because that's meant to be our landing, refueling zone.
Yeah, listen, all these things.
I think I have Tesla in my pension, but that is also based on the long view. It's got nothing to do with EVs whatsoever. It's got to do with the tech and the future space and logistics play.
Yeah, 100%.
Eric Jones saying, how dare Trump negotiate peace in the Middle East without the approval of Congress? Well, he went forward with Eric Jones, as we saw, with, bombing the three sites in Iran. That didn't have the nod from Congress either.
No, that's right. And again, look, I'm not about to kind of enter into this wormhole.
Yeah, we're not going to talk politics here.
Lots of presidents over time have not waited for the approval of Congress. If you wait for Congress to approve everything, nothing would happen.
It could take a long time. But yes, well pointed out. Also, we have quite a lot going on the defense front as well, because don't we have NATO today?
Yes, that's right.
Yeah. Also, expectation. If you come off my screen, I'll try and get that up for you. Okay. Today, there is this expectation that, this is a big summit, because there's expectation that they're going to agree to boost spending. We got lots of articles on, on the web, asking, could this be the most significant NATO since the Cold War? What do you think, Scotty?
Look, I think that countries, unfortunately, are coming around to the idea that that, in spite of the fact a lot of it's look at that picture as well. It's just, unfortunately, the photogenic president of the United States is the front of this. But yeah, look, it's getting forced into people's minds. And again, this is the whole argument that we're having only about markets, about complacency, right? You can't. Unfortunately, the world is arguably a less safer place than it was, and you have to defend yourselves. I know that it's not a palatable thing to have to necessarily think of. I don't want my children having to grow up in a less safe world, but regrettably, we've had 50 years of, arguable peace, although a few of my friends in the military would argue otherwise. But yeah, as regards, headline conflicts, we haven't had a global conflict for a long time. So if this means that we have to put money towards stopping that or looking to prevent it, then I guess it's money well spent.
I've got quite a lot of military friends as well, and they're saying that, unfortunately, they think that there might be positive mood music towards more spending, because no one wants this all to turn into a soup sandwich. Have you heard that term?
I have, yeah. That's absolutely, yeah.
Meaning an absolute mess when you're about to be deployed and someone who's come back from there goes, hey, what do you want to know about the region and the where you're being sent? And then if they hear anything that in any way, if someone says soup sandwich, then you're kind of in trouble, because it means it's a mess.
Yeah, not going to be good.
Eric Jones saying that's Boston sarcasm. What does that mean? Yeah, what does that mean? Please illuminate us.
So I don't know if he's Bostonian and he just says that's how we make jokes, or if there's something I've missed. But having worked with lots of guys from Boston over the years, I haven't explicitly heard of Boston sarcasm, but I think that's, I think we picked that up. Thankfully, Eric, we picked that up as very tongue-in-cheek, as we say over here. I don't know if that's the read across for Boston sarcasm, but yeah, so it's certainly tongue-in-cheek. Interesting question from Usman, actually, about how you guys see pound dollar for Q3 and Q4. I think, like anything, it's all on the dollar. I don't think, as much as Rich and I have spoken on here a couple of times, and you and I have spoken, the pound is not strong because the UK is great. It's just because of the fact that people are just moving out of US assets and just finding other homes for money, and because of the relative lack of liquidity in those other crosses like sterling, that's I mean, for I guess H2.
Here's the real story, right? Let's whack this up. Let's take a look at this. This tells you the real story.
Yeah, exactly right.
You know, Scotty's been here talking about it. I have been too, and you've been hearing from the early this year until now. You know, this is a repatriation of smart money, trying to find safer places to.
It's also worth bearing in mind when you look at this that 57% of that basket is the euro. So basically, this is euro dollar. But I think looking at actually, so while we're talking currencies, so looking at the dollar yen actually, if we can, when you're ready, just to click on that.
Yeah.
Yeah. So you know that just won't really move out of that range that we've been stuck in for a while now. But I did mention to Angeline this morning that there was a little snippet on the Bloomberg front page about the 20-year bond auction in Japan today. Obviously, that's a pretty minor thing. The demand was a little weaker than expected, so nothing to really move the markets. But again, CPI in Japan today, it was the core CPI, stronger. Last week, you had some strong inflation data. If I had to guess, that's probably just the next thing to keep your eye on. If you want to look for cautious things as you're driving down the road, look for obstacles and for threats in the road as you're driving down the road. That's probably just one to keep an eye on as well. Just those yields again, because if we're back to a relative peace and market making new highs, if you like a bit of protective thinking, probably just to keep an eye on Japan, the yen and the bond market there. That's just kind of, it's on the sidelines, but just make sure you keep it there on your radar.
Interesting stuff. And another thing to keep on your radar, we talked about the real collapse in the price of oil yesterday. Let's just really quickly get WTI up for you, because you know, we saw the start of this, right, trader friends, early on in the session, and you heard Dylan here saying that this could potentially gain momentum, and it did. Let's just show you the hourly chart as well, because have a look there. I mean, you know, Scotty and I were just talking about this morning. If you take a look at the markets and what they're showing you about how they feel about whether the ceasefire will hold, well, this is another clear indication that the market seems to think so. It's gone from, like, my goodness me, from the heady highs of the 70s all the way down very quickly to, you know, that 60, 65 handle.
Yeah.
You know?
Absolutely.
This comes in a time as well, don't forget, that when OPEC Plus is looking to ramp up oil output more rapidly in May, June, and July. Right, we're going to go to guess the chart. So if you want to win a prize like Boise and also Jesse 14, I'm going to have to send you another thing. Royal Mail is really expensive here, so I'm going to have to go for a lighter item, just letting you know. IG came to me and said, yeah, have you subscribed to this? Because you cannot join this competition if you do not subscribe and hit the like button as well. So no joining competition unless you've hit subscribe, people. Let's go to guess the stock. Hey, trader friends, just 2 minutes to the opening bell, and we have had a huge number of guesses. Scotty, take us through them.
Oh, crikey. Well, we've had EasyJet, Vestry, or is it Vestry? Yeah.
IAG,
look at that.
Oh,
Congratulations.
congratulations, Boise. Boise, 2 days in a row. My goodness, you are on
Is that 2 in a row?
fire.
Wow.
Fire, on fire. Are you paying producer Phil? Have you guys been on Discord and did you take a cut? Oh, producer Phil. Inside. Right. So let's have a quick look at the markets, because let's go through some upgrades and downgrades, because we've got 1 more minute. I'm pushing the bell towards Scotty just so that he is ready to go.
Didn't do my job.
Yeah, do your job. And also just taking you through some of the overnight headlines. Trump announcing Israel-Iran ceasefire. At the moment, markets, oil seeming to imply that this ceasefire will hold. And also dollar weakening broadly as well. Just taking a look at some of the equities. We've got AstraZeneca, looking at that because DataWay approved the lung cancer drug. This is in the US, I believe. Diageo also agreeing the sale of its Italian operations. Right, how many more seconds, producer Phil?
2, 1.
Here we go. Right, and we are off. Let's have a look out of the gate. Here we are. Scotty, take us through the opening moves.
Okay, well, where are we? We've got Germany. I mean, that is
off to the
Germany
races.
almost up 2%. I mean, that's just in a straight line. France as well, just lagging a touch. VIX back below 20. That's all helping. That's all following. Yeah, that's a proper global wave higher, isn't it?
It is.
Interesting just to see the Nikkei's. We touched upon with the Nikkei just underperforming a touch, but yeah, that's just a pretty global vote higher. That's a thumbs up from markets.
Let's have a look at my watch list then, FTSE 100, to see how that is shaking out. In fact, there's so much movement that we're seeing quite a bit of change there. So let's rejig that for you. Intercontinental Hotels, or otherwise known as IHG, now up 3.8%. The Anglo's up 3.6% as well. Antofagasta Copper, they're 3.2% higher. Scotty, anything there that pops out at you?
Interesting to see the banks jump in as well. HSBC, Barclays, Standard Chartered as well. Yeah, I mean, there's just anything. I mean, that's just a cyclical move higher, is it? That's just all cyclical stocks. JD, interesting. I know we were looking at JD recently last week. Yeah, there's some really good, very cyclically led moves there, basically, which you would expect on a relief rally day.
Yeah.
Shall we see what's lagging?
Yeah, here we are. Interestingly enough as well, taking a look at the downside there, we got Shell lower. They did jump in the last, right?
Just oil gearing, isn't it? I guess, and anything else. BAE down.
Yeah.
That's a defensive. Yeah, you can see that's a real cyclical wave higher, isn't it? Pretty much everything up.
Yeah, and because we had, the initial reaction higher for the oil majors, it's only natural that they would give back some of those gains. So if I look across to the rest of the space, it's probably we're going to probably see it across the board, right? Total Energy is down there.
Yeah, that's mimicked very similar, isn't it?
Yeah, and also BP as well. Let's have a look at BP. Oh, interestingly enough, BP, we're still waiting on that, maybe because sometimes we have big moves there. So keep an eye on that, producer Phil, for us, if you may. Just having BP, just having a look at elsewhere. Let's cross over to the Germans. Let's cross over. Right, let's shake it up there, Scotty.
Yep. Again, look, that's almost a mirror of the FTSE, isn't it? All the cyclicals, things like BASF as well, because it loves obviously lower energy price because of the chemicals. Yeah, listen, I mean, look, that's just a real big cyclical sweep high. I mean, that is some big early moves as well, actually. That's some really big early moves.
Big early moves. Also in the autos. I mean, look, Volkswagen, Porsche. Some of these were under pressure when we saw, the what happened over in the Middle East, but they are popping back up now. Volkswagen up 2.6%, Porsche up 2.4% as well, and we are seeing the reinsurers coming back as well. The Munich Re, and they Hanover Re as well, popping higher. Henkel, love that stock, up 1.5% there. They make all sorts of weird and wacky adhesives that we all use, but we don't know the company. No, great defensive there. Right, let's have a look at the downside. Not many. Has to be said, Rheinmetall, Scotty.
Interesting. I mean that is very widely held and a big play on the defensive.
Yeah.
Or the kind of spend for defence. I mean that's not the most liquid of stocks, and that's been really widely held. A lot of people have chased that, so that's probably just a pullback rather than real selling there. But yeah, that's definitely just worth keeping an eye on that though. Actually, over the next couple of days, without a doubt.
Yeah.
But yeah, as you say, I mean, there's not many red numbers there to play with, is there really?
Moving over to France, here we are. And for those of you that watched Tom Sosnoff and Anthony Batista with myself and Rich last week, whilst Tom and Rich are in Milan with Dylan, Bat is in Paris. Yes,
superb.
Yeah, with his wife and his son, because well-deserved break. That man, I've never known him to ever have, a day off sick, and they are in super early over there, just like us over here. So let's have a look at the winners. Scotty, luxury. You look like a man of luxury.
Oh, I'm a man of luxury, absolutely. I think this shirt's probably 20 years old, I think, if I remember. I mean, look, that is just a proper cycle relief again, at the risk of sounding like a broken record. That is just everything. Again, the banks are really moving higher across the whole of Europe as well, which is also good to see, supportive for the consumer. But yeah, those names that have lagged of late, they're really fighting back today, aren't they? I did see L'Oreal was up 2.5%. Apparently they make shampoo. Obviously that's not a product suite that I particularly have to worry about. But, good to see that they're.
What is the latest tagline? Is it because you're worth it? No, that's not.
Well, I suppose some might argue if I'm worth it, but yeah, I mean it's really interesting to see the luxuries.
Wait, BP's
down
open.
5.5%.
Look, you heard that here first, trader friends. BP, there you go. Andrew McKilvey, hot fingers, fast fingers there. Hope you caught that. Look at that gap down and showing you that, zooming in for you. We talked about all the oil majors giving back, some gains that we've seen recently, showing the 5-minute there. And can you see that big drop lower once we opened?
Absolutely. Well, once we see some price formation, you can make some observations around this with your recently acquired Next Level Up.
Thank you so much, Scotty. Scotty was one of the people who had faith when I had none. I think I told Scotty about this before I got the results, and I was like, I really don't think I've passed, really don't.
Nobody, I mean, who has that degree of arrogance that they think
just
they
like,
pass?
the 3.5 hours, and you have an inkling, right? You think, I have answered all the questions. I think I did, this one, I was completely Plummets, and also producer Phil every day in my ear saying she doesn't know even how to use FN F11 or her laptop. That wasn't.
But that's okay. That's not a case. For presenting, that's not a case here. It's not even a laptop. It's just a case. There's actually nothing here. It's actually Phil pressing all the buttons in the background.
I have used a simulation from Raphael that I can do, but laptop and business software, that's a bit beyond me. Sorry, I need help in that department.
Right.
Right, back to news. Back to news. Right, BP.
See if there's any follow on.
Let's have a look, because this is a good one, trader friends. If you're looking at this, they always ask me, and why do you have strange and wonderful watch lists? The reason for this, people, trader friends, that I have strange and wonderful watch list is because I like to section off, and you'll see here US defense, EU defense, and you have US mortgage lenders, and you have EU and other defense, and you've got luxury here, luxury in the US as well. You even have Canadian miners.
That is encyclopedic. I love it.
Yeah,
I love it.
That is because there is a method in my madness. So, for example, if you see BP, the Shells all down, the Totals all down today, as you can see here, then the likelihood is that might follow suit with all sessions, with your Chevrons, right? Airlines are pumping, I'm being told, EasyJet, because producer Phil is about to, is it EasyJet you're boarding to go to your holiday?
Absolutely.
He's-
Airlines are taking off as
Yeah.
one of the horrendous jokes that we would always throw out.
Okay, right. Let's take a look at Ryanair as well. And not just taking off, but, probably a bit of respite rally there, given the last few days, right? Yeah, and let's have a look at IAG as well, because this is one of the ones that was hit harder in relation to their shorter haul peers. And of course, when the Middle East situation erupted, Scotty, we did see that those that were long haul being affected more. So,
Yeah,
right,
of course, you have to cross that region. You're going to
have to
divert or not
skirt
go at all. Yeah,
around
absolutely.
it. Yeah,
Absolutely.
I fly to Asia quite a bit, so
Of course.
flying so that we avoid Ukrainian airspace, right? Adds, and I hate this because I want to get back as soon as possible.
Of course.
So it adds like 20 minutes to flight time sometimes, and it's
Yeah,
just
that might not sound a lot, but when you're on a plane for hours already, that
13.
extra 20 minutes
Yeah, 13 hours.
can actually make a difference.
When you come out, the air is different. That appears from the plane. Let's not even go there.
Yeah, 100%.
Right. Some of the other things that
How
want
about the
to
commods? Shall we look- see
yeah,
if
because
we
let's start with
look at
gold,
some
shall we?
commods?
Gold.
Yes, gold.
Oh, let's have a look at gold. Down 1.4. Let's go look at that. Right. So
Yeah, as we were talking, like, it just can't break that upper bound. It's just hit that resistance a few times, and that's, I mean, again, I know a few guys who have made a lot of money out of gold in the run up, but like anything, nothing goes up in a straight line nor forever.
yeah,
And that's a decent break, isn't it?
yeah. Look
That
at
is
that.
a decent break there.
That is.
And that is right. And then if we just look, because as you'll know, Ange, and you'll tell people, always look left on a chart.
Yeah.
So when we just bring that in, look, that's getting close to. Is that an old line you've drawn there?
Yeah, that is an old line.
That yellow line. That's,
Yeah.
I mean, that's potentially could come into play
Yeah. So
this week.
yeah, and
Looking at
3,300. I did say to our trader friends that if we break lower, if we get, a cessation of hostilities and a hold in the ceasefire, nothing bad happening to the Straits of Hormuz. Yesterday after the show, I quite like this, a bit geeky. In case you guys, I'll show you later, but I like looking at the marine shipping map with lifetime ships.
Oh, absolutely.
It's
the
so
same as the airline map.
Love a map. Love
Yeah,
a map.
You've got to do that.
And so this is a real, like Scotty was saying, always look left. And as you can see here, I've drawn that line for you, area of interest. And so we have broken through levels last seen 11th of June. And we're now crossing the next level of interest, which was back also early June. And it looks like if we continue in this path, we could get to 3,300. Only reason, trader friends, if you're asking me why I haven't gone down below, markets like round numbers, right, Scotty?
They do.
They do. It's just easy to remember, easy to say it after your second pint in the pub.
That's right. And three touch points as well on the graph.
Yeah.
Markets like validation, don't
They
they? So you can
do.
see there 3 touch points.
Yeah.
Makes for better, or the more touch points, the more valid the level. But yeah, 3 is like.
Oh,
the
look
minimum.
at you. Are you a closet MSTA as well?
Only minor. I only piggyback off smart people like you. Shall we actually have a quick look at the rest of the commodity space?
Right, so let's have a look. Let's have a look. So we've got, let's have a look at silver, because silver did go cuckoo bananas recently. That is not a technical term, but I stole that from Dylan. Yeah, cuckoo bananas.
Bananas, yeah, absolutely.
But, it does lag
It's like
gold.
nightclub in Florida. Maybe that's what you meant to say. I don't know.
Is there a nightclub in Florida?
I
Are
don't
you
know.
making that
It's
up?
that kind of name. It's that kind of name. I mean,
Okay,
I don't know enough about Florida, but.
Let's have a look elsewhere. Right. Natural gas also heading lower. And
Yeah, that's just anything protective. It's just.
copper also.
Yeah,
Let's
actually, it
have a
has
look at
copper. Yeah, if we can have a chart of copper, because that's been
copper-
really picking up lately,
Yeah,
isn't it?
copper has been picking up, and also what's interesting about copper is that, adding that to workspace, and copper has been picking up recently. I've drawn those lines of interest because I quite like knowing when it has broken above, and I then look at the volume to see whether that confirms the breakout. But copper, my humble opinion is that it's been supported by the softer dollar, right? And we have had a softer dollar. Is your laptop
Sorry.
speaking to,
oh my goodness me, how
to
embarrassing.
Scotty?
Okay, it's nothing that you might.
Ooh.
Nothing you might expect. There we go.
Did it
It's all
pick
right.
up on me saying copper?
it's a
Saying, in my humble opinion, that...
Yeah, actually said, try saying something interesting and don't leave it all to Ange.
So copper and trader friends, do let me know. Let's have a look at the chat there. Jugger saying, imagine Phil bullying Ange and saying to her, that's not shift, try pressing F5. Thank you. Right, we will go to break very quickly though. Copper, if you're trading this, trader friends, make sure you keep the dollar in sight because obviously it moves in tandem. Softer dollar, of course, helping copper higher. And also in times when, if there is going to be this whole and ceasefire, rising, risk appetite, because copper, of course, it's all about confidence, right? It's related to all building. There used to be a time, Scotty, when those that traded the space would buy data on, how many new buildings were being erected in China.
Yeah, or satellite photos and so on. I do think that's the big headwind for copper. There's just constant newspaper reports about shrinking population, all these empty cities and so on. So it's just, I think it needs a bit more to break. But yeah, it's getting there.
Yeah, it is getting there. Right, trader friends, we're going to go for a short break, but don't go away. Make sure you hit the like and subscribe button. Go and get your coffee, pop the kettle on, but keep us going because we have Rich, hopefully coming up next from Milan.
Ooh.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Scotty Byrne in the house, look at that.
In here with Ange, but I can't believe you're so far away.
Well, yeah, it was, off for a glass of vino with the boys last night.
Very nice, very nice. And how is Milan?
Well, we did have a glass of vino with the boys, but it turned into a Chinese meal.
Okay.
With the lads. So after the show, Sosnoff had decided he had enough pizza and pasta.
Yeah.
And then he's off to Sardinia with his wife for the next 3 days.
So that's more pizza and
4
pasta.
days.
Yeah.
So it's going to be pizza and pasta all week. So we went for Chinese last night. Dylan came along, and it was quite an evening. We, as you can imagine, the show was running from 5 p.m. London time to 7 p.m. So we got all the volatility, Scotty.
Oh wow! I mean, you couldn't have picked that any better, could you?
Well, it was great for those watching. It wasn't great for me.
I can imagine.
Disaster.
Yeah. I can imagine.
So,
I hope you had your floor jacket on though. At least it might have hidden some of the stress.
It would have helped, I think. So just to run you through I think we showed some of the trades from yesterday, but on Sunday we were watching the weekend markets, and of course oil was up 8%. It was showing $80. I managed to short some at $80.
Oh.
But Tom was short from Friday. So he couldn't wait to get in and trade oil, right? So he was for 24 hours, 30 hours nearly, he was waiting to make an oil trade, right? But when we go on stage, the first thing we do is we trade a little bit of the mini S&P or the micro S&P.
Yeah, sure.
So I'm up there and I'm all ready to go. You know what it's like, Scotty. We've been doing this for 20 years, right? You love being in front of the screen about to trade, and we trade decent size as well. So it's just like being back on the Credit Suisse floor. So the first trade he gives me is to get short S&P.
Okay.
So the market's trading like the SPOs are up 10, and it drops, and I managed to get a short, but I'm thinking that's dropped very quickly. Like I'm not quite sure what's going on there. So we're short S&P about flat on the day. Second trade he gives me is to get short oil.
Okay.
So I go in to sell a no, sorry, he wants me to buy a put spread in oil. So I try and buy a $5 wide put spread. And if you know the Tasty platform, you get mid prices. It's great. You're not dealing on the bidder offer.
Yeah, that's incredible, isn't it?
You go in for mids. And this thing, I think the price was about 6 cents wide. It was like $1 to $1.06, whatever. So I go in at $1.03, try and buy this put spread, and it jumps 3 cents.
Wow.
So I've missed it, right?
Yeah,
So I'm in front of 300 people, and Sosnoff is just staring at me. Andrea's translating into Italian that we're trying to buy this put spread in oil. And I realize it's just sitting there in my, working orders.
The worst feeling.
So I go, right, replace trades, amend it, and I take it up 3 cents to the new mid price, and I press send. Boom, jumps up another 3 cents. I'm like, are you kidding me? Sosnoff, are you filled yet? Are you filled yet? Are you filled yet? So,
that sounds familiar. That takes me back.
And the screen behind me is showing everything I'm doing, right? Everybody in that room can see that I'm chasing this. So next thing, it jumps another 3 cents before I've even amended the trade. I go in a penny above mids, and I miss it again. So of course Tom says, right, just leave it. Let's move on. So it's sitting there working, just waiting for the oil market to rally a little bit, get done.
Yeah.
And we start moving on to something else. So the next thing we trade was some Russell 2000, I think.
Okay.
Anyway, we do 5 more trades. And the whole night, I think we did about 32 trades, slightly less because we had the Italian translator the whole time.
Right, okay, yeah.
But I do 5 more trades, and this bloody oil trade is still sitting there. And by this point, it's moved, like it's $2 bid, right?
No.
He says, just cancel that one. You've missed it. And there's nothing worse as a trader when your boss, when your client has said, just cancel the trade.
Cancel the order, yeah.
And of course, that was that was the start of oil dropping 11% now in total.
Sure.
We would have made an absolute bundle on that.
Yeah.
Which would have helped us a lot because we were short the SPOs.
Well, yeah, I was going to say, yeah, that's, if you're running that as well, that's that could have been very sweet, couldn't it?
Luckily, he was long some United Airlines as well, so that covered us.
Okay, fine.
But the oil trade was, yeah. So of course, we did a whole show, and the show goes fantastic. You know, people are loving it because there's all the fills coming in.
Yeah, absolutely.
And it's all fast and frantic. And he comes across and, you know, shakes my hand.
Look at that.
So I was standing at the podium, and he, you know, I shook his hand at the end, and he said, yeah, not your best trading.
Thanks, Tom.
So
thank you very much.
It was an absolute fantastic night. Yeah, there was Scotty. People flew in, right? You can see the seats in the background there. So about 200 people. People flew in to Milan from Hungary, Belgium, Ireland. A lady from Malaysia came in, and Austria and Germany. I mean, how about that for coming in for one day to see a guy that's flown in from the US to trade options? That tells you how much loved he is across Europe.
Yeah, no, absolutely. And look, and it also, I think it shows the appetite as well, I think, for how you guys do it, just to help to demystify and help to dispel some of the kind of myths around it, because look, it's easy to find this sort of intel, or it looks easy to find this intel online, but to get and to see traders live, and look, I think to see you missing things, making mistakes, it just goes to show everybody's human. But as you say, that kind of pace of trading, I can't think of any other platform where you could see that sort of live trading and that kind of pace. And again, as you say, well timed as well. Yeah. Look, you know, sometimes you've got to get lucky, but yeah, listen, outstanding, right? And it shows the appetite of people.
It really showed off the platform so well last night, because you've got one trading screen and you don't have to change from it the whole night. Because it's got all the futures, it's got the currencies, it's got the commodities. You can see all that in your watch list.
Brilliant.
And then you can see what the prices are.
Yeah.
And you can see all your activity on the right-hand side. So it was... you know, it showed off the platform really well, and we got a bit of volatility. And these markets this morning, Scotty, what do you think of that?
Well, as we were saying over the last few days, and as Ange and I were saying, when you could say it's complacent, but at the end of the day, as we always say, money flow is the key, which means price action. And we could have got, or the market could have got these assumptions horribly wrong based on some of the historic playbooks, but it looks like whoever held out is now really getting paid off. And look, you could certainly see an attempt at the new all-time highs again on S&P, you would think, this week. It could even be today, the way the futures are going. But those cyclical moves across Europe this morning, that shows proper relief. Again, as you know, it's only early. You need the follow through, you need the volume to go through, but that's a proper relief rally across the board in things that have been lagging. So yeah, look, I mean, it's actually odd to think that we're still down on the S&P year to date, you know, only just, but.
Well, give it a few hours.
Yeah, give it a few hours, we'll be there. Yeah, absolutely.
What do you think, though? You know, look, I'm assuming we trade 6,100 today, right? Because Americans love to buy a tape that's up 1%.
Yeah.
Oil's not going to be a problem for inflation now, but back down to $65. You know, what do you think? Where can we go from here? Is it new all-time highs? Is it new all-time highs for the DAX? FTSE trails, were the oils down 5%? Is that right?
Yeah, I mean 5+, some of them. So I think that the positioning, I think because of the degree of skepticism around the impact of the tariffs and so on, I think you could certainly see a new all-time high in the short term. But I think that because we're coming into, you know, seasonably, as we were saying about our show at the end of May, which I can't believe it's already the end of June almost. You know, seasonality over the summer is tricky. You know, historically, it's not a strong period for the market. So I could certainly see a test. I don't know if you heard Ange and I speaking earlier on about some of the comments from Michelle Bowman yesterday saying that have we already seen the peak of inflation because of the tariffs? I mean, she's a hawk, and she's basically walking back on some of the comments around the impact of the tariffs. Powell, even though he did kind of stress it's a watch and wait situation last week, he did, I think some of his language did give him some room to acknowledge that the tariff impact is perhaps not as bad as we thought. And maybe somehow, which it's only, what, a couple of months or 3 months, you know, since we had these horrendous sell-offs, maybe we get lucky. But again, 9th of July, that's when the break or the pause of the tariffs ends. So there's always just something in the horizon. We did touch on Japan as well today, but I can certainly
Scott,
see.
You were never this good
highs.
when you were working for me. Where's this? Suddenly you're on television. You're an expert.
It's from watching you. It's from watching you. See, that's the thing. If we'd had our own TV show back in the day, it would have been better. But yeah, listen.
I don't think we would have lasted long.
No, look, I still say to people, it's when you do things like this, and when you get to talk to other people outside of our industry, you do realise that you can actually learn a lot from other people, and just from actually listening to other people, apart from being fed the daily kind of narrative from your own internal resources. So yeah, listen, I think all-time highs.
Scotty, make sure you get on our Discord group.
No,
because
I will.
Goodness,
Yes,
the
absolutely.
guys are firing in ideas there. Anybody, we've got 1,100 subscribers now as of this morning. So thank you all so much for watching and for subscribing.
Yeah.
But if you do want to get onto that Discord group, which is run by the wonderful Maturin over there,
Yes.
in Spain,
Yeah.
then you can contact him, because I am really impressed with the level of knowledge, the level of ideas, you know, and that's what makes the show so great, in my opinion, is the community and the comments that we get there. Everybody from Monkey Man, and we met Julian yet again on Friday, and Pelican was there as well, the mighty Pelican. So yeah, really, really good evening. Neil, away from the numbers. So it was great to see you all. But yeah, I definitely recommend this Discord group, because I'm blown away by the level of knowledge and ideas out there. So
Yes,
thank you.
absolutely. Yeah, I look forward to getting actually logged onto that and seeing some of the things that are coming through.
So yeah, that's it. It's really difficult because I'm still short a bucket load of calls on the S&P. So you know that's hurting me. I'm sort of scrambling to try and make enough to warrant running that, because I'm short the 6,000 calls, but they're trading at 380 ticks.
Mm-hmm.
So you're thinking, right? I don't want to buy them here because my break even is 6,380.
Yes.
So, you know, my thing there is to try and trade my way out of it, kind of, and keep the P&L coming in. So then when we do, you know, get some kind of slowdown in growth, rates higher for longer, then, you know, we see that realization. Sometimes it's in August, sometimes it's in October. And that's when you get the real P&L upswing. But it's, trying to make little bits here and there. So, you know, I don't think the FTSE's going anywhere today. I think the DAX has struggled. Everything's struggled a little bit. It's they've all dropped about 0.5% from the highs already.
Is that right?
DAX
Okay.
Is
That's what
DAX is up 1.5 now.
That's what we were talking about. It's that initial markup. But there has to be a degree of skepticism around this ceasefire holding and so on.
That's it, right?
There's still two.
Netanyahu,
there's.
Is he just going to sit back now that? Well, there's two lines of thought. Either US didn't destroy Iran's nuclear capabilities, and they're not even in the 3 venues that were hit. So, you know, is there something still there? And the supreme leader, you know, has done his thing, but is quite happy that he's still got, you know, his game plan is still there.
Well, just
So
as we're
agrees to a
talking, from
ceasefire is the
Turkey,
best thing.
ceasefire just broken by Iran attacking Israel. Breaking news on IG Twitter feed. Reports of Iranian missile launch. So that would account for the little pullback. I mean, again, unfortunately, okay, again,
But it's
not
on
able
the
to
Twitter feed,
confirm
is
it. We can't be sure about that. But I'm sure if it's been seen. I think the tensions in the area, just because of a bit of shadow boxing from the US and a couple of targeted strikes from them, and then more targeted retaliation from Iran. These things are never this clean cut.
That's it. And Netanyahu hasn't. A ceasefire means nothing to him.
No,
So,
absolutely, yeah. I mean, I think
you know,
now having
if
the US
Iran
in
is
their
really
corner,
on its you know, if its defenses have been hit that badly, then there's no way that Netanyahu is going to sit back and let them rebuild, receive funding from outside, receive arms from outside. Yeah, it's just not. Well, we know very well it's not in his.
yeah, absolutely. And again, a second piece from Kirky again, asking, did Iran actually announce acceptance of the ceasefire? Trump announced and Israel agreed, but did Iran announce? Again, this whole thing about which media source we're taking. Obviously, Western media are going to jump on this. And look, ceasefires are only effectively words. They have to be backed up by actions, as we were saying. So yeah, it would be incredible to think that this would just be over so quickly. So yeah, I guess there's always something to watch. Always something to watch.
It's like you stopping your two kids from fighting each other, Scotty, isn't it? No
Absolutely.
chance.
Even at 18 and 17, ceasefires last a very short time and they're quickly broken.
Well, that's me. I was on a holiday officially from midnight last night, Scotty. So producer Phil has twisted my arm to be here this morning. But
Well done.
I am now off to the seaside to enjoy
Lovely.
an ocean slightly warmer than the North Sea that I grew
Maybe
up
a little stop by the Prada outlet shop. Little pair of sunglasses or something, or a t-shirt.
Or like Prodo.
Prodo, yeah, absolutely. Prodo, yeah. Primani, yeah, Primani
There
from
are
the
some
boys
really
in the
nice
gallery.
Nikes out there. That there's a whole different range of Nikes across in Italy than there is from the UK. So I can go for my life.
Okay, you do that then, mate.
Good stuff, Scotty. Wonderful to see you again. And have a great rest of the week.
All right,
Best
mate.
of luck in your trading. And I shall
Cheers,
be
boss.
back fresh with a suntan on Monday morning.
Lovely. See you soon, Rich.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
You're live. Put your earpiece in.
Hey, trader friends! My earpiece fell out.
Amateur hour.
I know. I was intently watching you, thinking, why is there no count? Why is there no count? Welcome back. We are here with the king of volatility, the one, the only, Matt Arbour.
Morning, Ange. Well, yeah. Bit more excitement, or strange sort of excitement in the markets.
Strange
We're
excitement.
complaining yesterday morning. It was all a bit
Meh.
sort of, yeah.
Yeah, and also quiet. You know, markets seem to be shrugging it off.
And yet, even yesterday before this ceasefire and the sort of strange reaction where markets prefer the idea of there not being a war more than they panic about there being a war. But even yesterday, some of the moves we saw in main session when the US came in, the Tesla move, Tesla up 10% on that, the old robo-taxi demonstration.
I know. But also the pop was, across the board with all those consumer discretionary type stocks.
Yeah,
right?
really strong. And unless, of course, popular name at the moment, HIMS, Novo pulling their Wegovy sort of licensing to HIMS. HIMS came off 20%, sort of got absolutely battered. A lot of popular single name movement.
Yeah.
And then the other story that's sort of been ticking around the market for a while, and we saw really filter through for about a third day running. The market's love of the SEC's ruling on, or semi-ruling, discussing tokenization for the likes of Coinbase, Circle Internet, popping another 20%, which has been the sort of a name that IG clients have really picked up on trading of late, and has just absolute tear higher and keeps on moving higher.
I mean, it's incredible, isn't it? Scott and I were talking about this earlier. Is this just, market complacency that we're looking at? Or is it, markets still, thinking, we'll climb the wall of worry when we see something that is permanent, but they've got so used to chopping and changing by Trump that...
Well, it's interesting, isn't it? The sort of the irrational exuberance, like the last days of Rome sort of moves on these positive news, the extended upside we're seeing. It's almost we looked into the abyss 2 months ago, and the silliest thing you could have done was to believe that markets could fall, and that seems to have carried on that sentiment into sort of everyday trading. The robo-taxi demonstration, we've been waiting for the robo-taxi demonstration from Tesla for a long time. To see it, Dan Ives coming out and saying, I rode in the robo-taxi, it was really smooth, we didn't kill anyone, is worth 10% on the share price. It's remarkable.
And the fact that I heard on the radio that it wasn't all smooth as butter, was it? It wasn't all smooth. Apparently there was some false stop somewhere in the middle of the whole process. Let's have a look at that move here. This is Tesla, and look at that pop in the previous session. Be interesting to see what happens when all sessions get going. But that is 9.7% higher.
Yeah, and it feels with the sort of general rise in the market, that's probably just going to trend a bit higher as we open once more. Yeah. Perhaps there were a number of shorts still hanging out there, and that there's something of a short squeeze going on.
Do you think that maybe Tesla has got past its pain? That I've drawn a line there to show you how far it's fallen since December 2024. Do you think we're kind of like in the upward trend now?
Well, we've moved back. The story's kind of pivoted once more, hasn't it? That a lot of the sell-off was, hold on, Tesla aren't actually selling many cars anymore. There's almost whereas before Tesla had a luxury cachet and an association, people wanted to own a Tesla. It's more likely that people don't want to own a Tesla now. But
like Tom Sosnoff, who sold his Tesla.
Really?
Yes. The moment, Trump and Elon Musk, Trump 2.0.
I bet that's a terrible market, second-hand Teslas.
He said he doesn't care. He's happy to take the loss. He's not going to drive a Tesla. So he sold it. And he announced it to everyone when he was here last year in, I think it was autumn. But yeah, Tesla, interesting.
But it's interesting that it's moved away. So part of the rally up, as Tesla moved into profit, as sales went, as it sort of matched with whatever it was. I can't remember the exact number. The quarterly numbers became good-looking numbers, and it went profit. Now we've pivoted back to it being all about the software, which Musk has tried to be sell for a while. But this idea that there's this sort of sentient fleet of Teslas everywhere that will suddenly turn into taxis for everyone, and
yeah,
this is the future.
The future as well, which I find quite fascinating. Those of you that trade and watch this space, the whole premise of the software being installed in these cars is that if Matt Arbour has a Tesla but is not using it, then he could lease it out.
Just
right?
move off outside my house. I'd like to say my driveway, but I don't have one. It'll move out that controlled parking. We'll never get the parking space again. All those people who keep on stealing parking space. Anyhow.
But also, have you read a lot about the premise that it's all linked to Elon Musk's mobile defense systems. So it's Starlink. Piers, who works for Macor rather, has talked about this many times with me, and there is a vast number of Tesla fans, shall we call it. They've got a big retail space. Places in the US, believe it or not, true story, there are Tesla parties out there where they have parties in the house to watch the, actual event or live unveiling. I mean, guys, don't you have something better to do? But, hey, whatever rocks your boat. But there is a number of loyal fans that think that the cars, a bit fast and furious, but Starlink as well, which then can get hooked up to systems on drones, it could then provide defense systems that are mobile. Call it what you may. I don't think this is going to be imminent, but
so the Teslas could turn on us.
Yeah, so it could be like space.
Overthrown by the Tesla army.
Yes. And they have their own broadcast
Slightly
system already,
dystopian.
right? They have their own broadcast system, X.
A bit like Transformers.
A bit like
The
Transformers.
Autobots rise against us.
But it's the connectivity.
Except the Autobots are the good ones.
Yes, the Decepticons.
Throwing it all on its head. The Autobots were the cars, they were the good ones.
Yeah. So the whole madness in this is all tied to also the logistics and the fact that they're bringing stuff up into space, for NASA and the like. Funky Gibbon there. A lot of talk right now still on enriched uranium. Lots of mixed reports out there. Some that I've read saying that by the time those bunker busters hit, there was enough time for the enriched uranium to be moved elsewhere.
Well, this is what you would guess, isn't it? Because it's not like it wasn't trailed, but then finding somewhere to move that big store of enriched uranium to, and moving enriched uranium, it's not like sticking it in the back of your Tesla.
No. Or your truck.
Yeah, so it would feel remiss for the Iranians not to have moved it, given that everybody seemed to know where it was stored.
Yeah.
And everybody was talking about.
You didn't have to look too hard. There's a map as well.
Yeah, it seems all a bit odd. It's not kind of how your secret strategic stores should be managed. But then the logistics of moving it, it's an interesting one. You can build as many theories as you like around these things, but in essence, we step back. The markets didn't care.
No, the markets did not. They didn't seem to even. I mean, look at. Let's take a look at the options.
The market's belief that
it's
the
all
Iranians were
over.
going to do anything with their enriched uranium, just never really came.
Let's have a look at. Shall we look at the daily first before moving over to the weekly? Just to look at volatility there. It's even lower. Look at that.
The volatility now has come off. It has collapsed, which is often what you see on a sharp up move, and there'll still be a significant downside bias in there, but won't be as sharp. The skew on the market over the past few days has been really, really heavily to the downside. If you were a seller of S&P puts, of DAX puts, some of the premiums you were receiving for a week's time value were very, very rich. But central vol was low, or lower, not as low as it is now, but with a huge downside skew. on the idea, the perception was that the downside where the risk was, when in fact, once again, the market's more inclined to pop to the top side on good news than fall on bad news.
Yeah, it's remarkable, isn't it? And also the fact that you know, after the 13th of June when all this started, I looked at vol and clocked it and it was like 20, 21. Look at it now, it's like 15.
We are back,
14.
yeah, languishing, which again, lots of people would say this is often the point where you can see that the market has become too complacent. When you see S&P vols tending below that 15% level, going back towards the sort of low double digits, it's almost. Is anyone really selling vol at these levels? There's a complacency there. It's the tail risk feels a bit high.
Let's take a look at commodities. Oil, an interesting space as well. Let's have a look at that.
It was almost yesterday as if the oil markets knew.
Yeah, someone telegraphed or telegrammed or called, right, and made a sort of like it's gonna be fine, guys. Stand down. It's gonna be fine. Which brings me to this chart that I crunched earlier on. It came in early, had quite a few, I don't know what's up with the trains, but Scotty Byrne also had issues, but luckily I left early enough. But just taking a look at this chart here that I'm putting up for you guys, and in case you're wondering why they're screaming in there, it's because I pressed F11 before they told me to. It is a skill, guys. You know how many windows I have up here to show our trader friends and illustrate what we are looking at.
What are we looking at here, Ange?
So it's just a quick, you know, synopsis, and this is from a number of experts, you know, the RAND, IISS as well, and looking at negotiated de-escalation to 5%. But what I really want to put your attention to is, like, you know, how small that full-scale war risk is in terms of percentage. At the moment, it looks like you can come off that now. Markets are just thinking it's done and dusted. That's it. Move on.
Yeah, I think if we cast our mind back to how many years ago, as the tanks were massed on the Ukrainian border, and markets the markets weren't pricing in any risk. That they would cross over, that the Russians would actually move on Ukraine.
Yes, because they weren't
looking... Those of us who are around, that it was almost this macro shock when Putin said, rolled the tanks in.
Yeah, precisely.
It's incredible.
Except during that time, I wasn't shocked because I was looking at the treads of the tank, and they were winter treads. So, but back to this, you're totally right. You're totally right.
But markets pricing war risk, have kind of missed it on the recent occasions.
Yeah, looking at the FX space as well, because, you know, dollar is still very, very low. Let's have a look at that. And also the fact that, you know, we've got a number of key events later today. We got JP. That's 3 o'clock, isn't it?
3 o'clock.
Yeah, 3 o'clock. He's not expected to say anything drastic, and if anything, the expectation of 2 rate cuts still hold, no change there. So we are going to potentially have quite an interesting one when we get some of the key highlights from NATO. They're also meeting today. And the expectation is they're going to look at putting more money to work in terms of defence. But we already knew that already, right?
We already know that's a bit late, and of course everyone's this reframing your defence spending as infrastructure spending and the general fudge. What can we pretend to Trump that we're spending our defence money on? That's not actually defence. We're actually building HS2.
It's taken ages. But yeah, I think, you know, what's more interesting is Michelle Bowman. You heard Scotty and I talking about this earlier on. You know, they're becoming, she and Goolsbee, becoming less and less concerned about the inflationary impact of Trump's tariffs, right? And
is that because they don't think they're actually going to happen?
Yeah, perhaps. Because now suddenly the world seems to have forgotten about tariffs.
Well, completely. What is it? Next week is July the 4th. Next Friday.
It is next Friday.
Independence Day, tariffs. Maybe we start thinking about tariffs again. Oh, good Lord, tariffs are coming.
Yeah. You know, the wording is interesting too, because Bowman said, I think it is likely that the impact of tariffs on inflation may take longer, be more delayed, have a smaller impact than initially thought. So it does sound as if...
Well, they'll be delayed. Obviously, if you think tariffs are coming in, you've shipped your containers already. You've had 3 months to stockpile, so you can sort of kick the can down the line in terms of those price rises. It's only when the next cycle of orders come in that it's going to start hitting Main Street.
It's the change in tone, and even weirder still, Bowman is generally acknowledged as a hawk, right? And now there's this kind of like dovish mood music coming out. So does this, for someone who's trading US markets, is this all kind of like, well, buy the dip?
Well, everyone trading US markets keeps on buying dips at the moment.
Buying the dip, yeah. If you came out of that April tariff tantrum, you would have been burnt, right?
Yeah. If you came out on any missile strike, it's quite remarkable.
It is remarkable. It is
bullishness.
We talked about the consumer discretionary as well. It wasn't just the Teslas and the good names that you mentioned, but also, some of the retailers, your Costco's, your Walmart's, the consumer space, they all seem to pick up. And US markets also closed strongly, I thought, despite the landscape in the last session. So, trader friends, if you have a call as to what you think S&P 500 is going to close out the end of the month, do put them here, and don't forget to slam and like us, because to get more of this handy stuff, we're going to talk about, I'm going to show you that marine shipping app, which is pretty cool. Have you used it? It shows you all the moving vessels in the...
They're all queuing at the Straits of Hormuz.
Well, yeah, they're all queuing. And yesterday they said 2 were turned away, but I didn't see it on the map. I love a map.
I read of zigzagging through the Straits yesterday.
Yeah,
that's an interesting picture.
Trying to dodge. Producer Phil, what's up? All right, stick around for all sessions. Opening bell, we're going to take you through Tesla. We're going to take you through Hins and Hers. We're going to take you through a load more. So don't go away, and we will be right back.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
So interesting.
Hey, trader friends, we are back with Scotty for all sessions, and a really exciting day here, really exciting. You've heard us talk about how markets seem to be pricing in that the ceasefire will hold.
Yeah, I mean, you can see Europe's probably had the bigger drop on these unconfirmed headlines about missile launches. US futures don't really seem to care. They look pretty insulated from it for now, but yeah, I think a bigger reaction in Europe, as you might guess. Unfortunately, these things, as we were saying earlier on, you and I and Rich, are never normally clean cut, and very rarely end as simply as we want them to. But again, it's just something else to think about.
It is definitely something to think about, especially on a day like this. We are counting down not only to the all sessions opening bell, but we also have JP speaking later on. 1500, isn't it? 1500,
Yes,
I
that's
believe,
right.
is
That's
the
right.
time.
Yeah.
We also have NATO meeting, waiting on confirmation of, they're going to have a key highlights press conference later, 10 seconds to the opening bell.
Oh, goodness
which is
me,
next to
twice.
Scotty,
I never get to do this twice.
Come on, where
Count me down.
go! Woo! And we will get one as soon as we get as many subscribers as possible. We want to get to 2,000. Hopefully by then we will get Greg's to sponsor that bell. In fact, we're going to go march right down later on and have a chat with them. LSEG also on the list, of course. Let's have a look at how it is shaking up on the all sessions. Right. Let's have a look here. I'm going to press that change button because it has been moving quite rapidly. Here we go. The winners list. Virgin Galactic, top of the board. Take us through some of the others.
Hims and Hers Health. Wow.
Yeah. This is what we were talking about yesterday. Consumer discretionary went through the roof. They were roofing. Today, a continuation.
Yeah, that's really interesting. Supermicro has been pretty choppy, so probably this we can probably ignore that. But yeah, look, that semiconductor 3 times bull ETF, that tells you what's going to lead the US this afternoon. Some of the tech names are getting back on the front foot again yesterday, outside of the consumer rebound. But yeah, a lot of these consumer ones are really looking to push on.
And take a look at the airlines as well.
Yeah.
Delta Airlines pushing back up to the skies, up 2% there. United as well. These are some of the bigger airlines that got bashed after the Middle East tensions started, creeping in, and we had those strikes, right, on Friday. It was a Friday the 13th. I think it was a Friday the 13th, because it happened early on our time. And also taking a look at elsewhere, we've got the upstarts, Riot Blockchain. So, some of those risk-related financial instruments.
Actually, we're able to get a chart up of that iShares MSCI Emerging Market ETF. You see second from the bottom of the screen, about another 70. Yeah, just because that's been a bit of a stealth one, really. But we haven't spoken too much about emerging markets, but that's been a proper leader, obviously, with things like the weaker dollar, measures from China, hopefully a break in the tariffs. That's been a real kind of stealth beneficiary, which people have been talking about less. And that's something Rich and I used to work on, was emerging markets. So that's obviously close to our hearts. But that's been a pretty unbroken move higher, which again, metals have been moving, but generally you would get that pretty closely correlated with copper because a lot of that used to be led by China.
Yeah.
But now you're having India, which is one of the blowout drivers, and just the currency impacts as well. So I think that's quite an interesting one that's breaking out again too. So that's always something to bear in mind.
Do you know what the Aussies and the Chinese, they used to call copper hun, which just means, white powder, as in like something that, China needs a lot of, right?
Sure.
White powder.
Yeah, absolutely.
And of course, for the Aussies, they wanted to keep them sweet because they could supply the stuff.
Yeah, absolutely.
But from a technical viewpoint, I'm just going to show you, trader friends, what, for us technicians, what really piques our interest.
There we go.
Right, look here. There's a really nice little doji here, which sometimes heralds a change in trend. But also taking a look at this chart here, what Scotty is saying is correct. It does look like a strong uptrend still because we're seeing more green candles than red candles. I wanted to squeeze 4 candles in there somewhere, but I...
All the two Ronnie's fans out there.
Two
If anyone still
Ronnies.
remembers. Yes,
Yeah.
absolutely.
Let's take a look at the opposing side of the all sessions here whilst we're at it as well. So let's have a look at the losers list. Oxy is down. Interestingly, down 2% there. This is mostly a risk-on day, but taking a look at these, the miners, Barrick Mining is down 1.6%.
Absolutely.
And the oil majors, the Exxons, the Chevrons that have gained recently because of the geopolitical tensions, well, they're giving back some of those gains, right?
Interesting seeing things like Walmart not pushing on at the moment, just from that early strength yesterday. That's just at the start of those small outperformers. So maybe some of the consumer names that we were talking about being strong yesterday in the US might not catch that early bid. I would guess, looking at some of those movers back on the top side, that you'll be looking at the tech stocks to have a markup. And I was thinking of you the other day when I saw Apple get back above $200.
Whoa, yes. So, there were some concerns. Luke Moore was here. So Luke, as you all trader friends know, a firm favorite from the PCM desk here. I'm going to take away that Ichimoku cloud here so that I can make it a bit easier for you to see. I like the Ichimoku. I'm a big fan. Do you ever use it?
It's great for trends. I was very skeptical of it.
Yeah.
But then I did a session back in March with Mr. David Linton. Shout out to David, who, if you're a technician, you all know David. He's written 2 books on Ichimokus, and very nice of him to actually make fun of himself. He said, if you're ever struggling to sleep, read one of my books on Ichimoku. But yeah, really good for swing trading and for trends, actually, I think.
Yeah, and it's a good snapshot, isn't it?
It's a great snapshot, yeah. It's one of those ones because it basically calculates itself. You don't have to draw too much.
Yeah.
But you can take a lot from it.
Yeah, you can take a lot, and it can kind of like gauge where it's heading, whether it's above the cloud or below the cloud. So just taking a look at Apple here, clear the Ichimoku so it's cleaner for you. And Luke Moore was giving me slight kittens because I do have Apple in my pension, and Luke was saying that could this be the start of further softness, and potentially we haven't seen any new products. He was saying any new products from Apple. They've just been rehashing the old favorites, making it bigger, tweaking around the edges, right? Nothing controversial, nothing that is a game changer. And so we're discussing whether there was a risk that Apple could become like remember when Nokia, everyone carried a Nokia and everyone kind of thought it could never be unseated, and now
that's true. Yeah, that's true.
Right, we have got how Aaron Bright waiting in the wings with Martin as well. So to talk more about smart portfolios and how to manage rather your pension portfolio, whether or not you should be doing anything given the tit for tat and the fact that Trump is now calling this a 12-day war, the end of a 12-day war, although it's not been mentioned by any other party. It has to be said. Do stay here and slam your questions here for them. We'll get them asked for you. And Scotty, it's been such a pleasure having you on.
Thanks again.
Yeah.
Enjoyed it as always.
Fantastic. Right. Stay there. We'll be right back. Any questions, put them in the chat.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello, welcome back to our latest segment. We're discussing all things macro, and it's been a very busy period for macroeconomics and geopolitics recently. Joined with Martin Harris today. I'm Aaron Bright. We co-manage the smart portfolios together. How are you doing today, Martin?
Yeah, fine. Thanks to you, Aaron. Thanks for introducing me. It's good to be here. Good to speak to our listeners. So if you've got any questions for us, please put them into the chat.
Yeah.
We'll be scanning through the questions as they come through. Aaron, I think I'm going to set you up first. Could you tell us a little bit about what the smart portfolios are?
Certainly. They are essentially a one-stop shop to building and having a long-term investment product with IG. It's a diversified investment portfolio of ETFs where we use asset allocation insights from BlackRock to construct risk-adjusted multi-asset portfolios. There's 5 different portfolios depending on your level of risk, and it's a D2C, direct-to-consumer robo-advice tool. So you'll take a questionnaire, and then you'll be suggested a portfolio based on a survey constructed by I believe it's an actuarial company who we partner with, and they will help you choose a suitable portfolio for you to invest in over the longer term.
That's a great sales pitch. Thank you, Aaron.
Thank you. 5 out of 5 marks or 4?
I'll give you 3.5.
3.5. Okay, I'll take it. I'll take it.
I think the sort of the thoughts on everyone's mind at the moment are geopolitics.
Yeah.
I mean, we've been speaking about it for a while. Maybe just get us up to speed with what the situation is.
Yes, certainly. I mean, this has been something we've been discussing for probably more than 2 years. The situation, particularly between Iran and Israel, and the potential for conflict in that region. And obviously, over the past 18 months, we've seen various phases of the conflict. Last week, Friday the 13th, it entered, I'd say, a particularly new phase where we saw, direct Israeli strikes on IRGC positions, nuclear sites, and ballistic missile launches in Iran. And we've seen sort of an exchange of fire going on in the region. Obviously, we've seen a huge development with the US get involved with their B-2 bunker busters, with the US administration saying that the Iranian nuclear program has been destroyed. Obviously, we don't have any credible intelligence at the moment apart from what's being said. And now we've got a pretty fragile ceasefire at the moment. It's only meant to last 12 hours, but it was actually broken overnight. There were some airstrikes, ballistic missiles actually sent into Israel overnight. So we will have to see what happens. I don't think this is the end of the situation, given the fact that the two parties are sort of at odds with each other in the Middle East. But a lot of volatility both in oil markets, in gold, and not so much in equities market. We did have a strong performance from the S&P 500 last night on the back of what was quite a weak Iranian retaliatory response in the Qatari bases and a little bit in Kuwait as well.
Yeah, I think that's one of the topics on everyone's minds, that we're on the verge of World War III.
Yeah.
Markets are going up. So, I mean, do you have any insight into why you think that markets are continuing to rally or at least remain stable? Given the sort of difficult circumstances and potential escalation from here?
Well, remember, markets are always forward-looking. So we've been on the cusp of World War III for quite a while now. So that's almost, you could say that's a little bit priced in. I think what we're seeing is we saw the US take out the Iranian nuclear sites, allegedly. Certainly, a lot of damage was inflicted on Natanz, Fordo, and Isfahan nuclear sites in Iran, using B-2 bombers in their largest operational campaign in history. that's seen as a massive positive for capitalism, for just general growth. I mean, the threat of a sort of a more rogue nuclear nation is obviously a concern for markets. So with that threat being allegedly certainly, reduced for the time being, markets see that as a big positive. And, Iran had many different options to respond. They vowed for everlasting consequences, which many interpreted, and their parliament actually suggested that they were going to close the Straits of Hormuz, which sees 20% of oil and gas go through there. Obviously, that remains open. I've been closely monitoring traffic through there.
What's the situation there with, we've spoken about it so many times, you hear people constantly badgering on about the Straits of Hormuz. What is the situation there? As you've mentioned, 20 to 25% of oil and gas comes through the Strait of Hormuz, out from the Gulf, going to the rest of the world. Iranians selling a lot of oil to the likes of China.
It's not just Iran. You've got the UAE, you've got Bahrain, you've got Kuwait, and you've also got Dammam, which is the Saudi Arabian coastline, which exports oil all through that strait as well.
Yes, so that's where the 25% of global supply comes from. You've also got the Iranians selling a lot of oil out to China. The Americans reportedly putting pressure on China, trying to get them to keep Iran from closing the Straits of Hormuz. Is there any updates or any insight into that?
I don't have a yacht there, so I can't comment officially. But, look, I think Iran know that it's a weapon in their arsenal. It's not a particularly conventional weapon, like a missile or a military strike, but it's a very powerful economic weapon. We know that oil is the lifeblood of the global economy, whether it's for energy, even though we are, moving towards a greener world with more sort of biofuels and cleaner energy. Oil is still used for absolutely many other uses, plastics, construction. So even if we move towards a greener energy world, it's still baked into many different products across the world. So it's still going to be vital for the global economy, which is why that obviously with American interests want to keep oil prices as sustainable and as low as possible, because sort of $120 a barrel, it becomes a huge pressure for American consumers, the general public, and then we start to see it eating into companies' earnings, and we start to see a bit of a downward trend in the US. So it's a really sort of quite sneaky but powerful weapon which the Iranians can deploy. But obviously they didn't deploy it. At the moment it seems to be functioning okay. We can have a look on our Bloomberg later to have a look at the shipping traffic, as we were doing a couple of years ago with the Suez Canal. And they had a very limited response.
I think I've only been looking at flight data, and you can see people evacuating.
You can see all the diversions yesterday.
You can see the diversions, and I think late during the ceasefire time, there are a number of helicopters exiting that region, being sort of chaperoned by F-15s. So a couple of things there. So I think one of the things that we've spoken about for a while now has been defense stocks, particularly coming out of Europe. The EU economy, fiscal stimulus programs in Germany. Do you want to maybe just touch on that and where we see Europe going with that?
Yeah, I mean the fiscal stimulus in Germany is much needed, and I mean we spoke to investment strategists last year who essentially said that for the UK and Europe to reach their potential, there needed to be some sort of flashpoint or catalyst, and this arguably can be quite a significant one, because you've got the likes of 20% of German GDP being spent on huge amount of stimulus for defence and infrastructure, and we've seen a huge increase in popularity in EU stocks this year. We've got the DAX up a tremendous amount, massively outperforming US stocks and also UK stocks on the back of this news, and trading at about 40% lower forward PE compared to the US. So you're getting a really attractive valuation there, whilst also the narrative is looking good.
Yeah, no, I think you've nailed this. So I mean, incoming German government proposing spending 900 billion euros. It's 20% of of Germany's GDP. It's about 5% of total EU GDP, and that is the fiscal stimulus package that they proposed. I think the big one that when we spoke to Tom Bailey from Han with regards to defence spending is that a lot of the European nations had been behind on their NATO agreements of keeping up to 2.5% of GDP. A lot of them pack their defence spending with things like retirement funds for the army and things like that, and it's not actually R&D and actual military expense.
We've got a question here from R. Saxena. Defence stocks are falling, especially German. Any thoughts? I mean, we can both have a stab at this if you'd like, but I think there's basically an element of profit taking for sure in that, because we've seen a huge run since the beginning of the year. Moving an astonishing amount, really. Yeah. And the rhetoric coming out of America, we know America is one of the biggest global superpower, and the message from Trump's Truth Social account last night was very peaceful, even though it was all in caps lock, basically saying that we want peace, ceasefire is enacted, please obey it, and that will definitely have a play in the sort of short-term moves of defence stocks.
Yeah, absolutely. To reiterate what you've said, we've just had a massive de-escalation of the situation, and so if the war is at this stage potentially over, you're not going to continue that rally. So exactly what you mentioned, a lot of profit taking there. There's been a massive rally in defence stocks. Those ETFs that we've mentioned previously, the sort of four that we talk about most of the time, with the VanEck defence, First Trust Missile, we've got the Han ETF, NATO, and there's a Global X aerospace and defence ETF as well. Profit taking, I think, in that space, given the de-escalation. Let's maybe take a look at US economy. I think before we got to the situation of the war, the discussion was always about tariffs. Trade truce at the moment with China. Do you want to maybe touch on that and the benefits?
So, at its peak, we saw tariffs at like 120%, where the number was actually insignificant. It gets to a point where it's like 120%, 140% is still going to cause a huge amount of pain. But we're now back to, I believe, 30%. That's the agreed tariff level, which is much more palatable, I would say. But we know how things can change very rapidly with regards to tariff policy. So at the moment, markets are sort of seeing that as a little bit of a positive. A bit of cooperation is now on the table. We're seeing some form of agreement between different nations. UK and the US have now got a trade agreement. I think there's probably likely to be one with Europe as well. And China, there's advanced negotiations that they're going to come to some sort of agreement with regards to tariff policy. When tariffs are at a more palatable level, you tend to see more optimism, given the fact that they moved so quickly and we saw sentiment basically vanish and completely fall apart, that things are looking a bit more rosy now in terms of trade. And obviously the tariff level, we'd expect, if you were importing goods, they were vital for your business, and you wanted to keep your bottom line strong, you're going to pass those costs on to me if I was your consumer. So that would obviously eat into, consumer spending and disposable income for US consumers and likely put a strain on the US economy. If that figure is now much smaller, which is forecasted to be by, we're talking sort of 100 percentage points, massive potential threat of sort of sticky, stagnant, uncomfortable inflation plaguing the US economy, that risk has now been reduced, I would say. Not out of the question, but it's certainly been reduced, and that's why we're seeing a little bit of positivity, I'd say.
Yeah, I think looking at a few of the large US retailers, they've started reducing costs, laying off staff and so on, in order to eat some of those potential tariffs coming through to keep prices stable. I think there's a lot of political pressure on them to do so. You do not want to get blasted by the entire Trump administration for hiking prices at this point. Just some stats here. US inflation rose to 2.4% in May, up from April's 2.3%. So a 4-year low on the back of, we've got higher housing prices and food prices.
Still not, the battle's not over, I don't think. 2.4% is still just above target. It's still massively improved. And, if you're sitting me down in 2022 and you're saying in 18 months you've got inflation at sort of basically normal levels, I think you'd take it. But there's still elements where the central banks could be complacent. I think there's definitely an element if the rates are reduced too quickly, there could be a concern.
I think certainly Jerome Powell's looking at the situation with Iran at the moment, with the potential closure of the Straits of Hormuz. Does he want to be cutting rates in this environment? No, he's going to wait for the data to come out.
And also, I read somewhere where a strategist said that Jerome Powell and JP Morgan and Donald Trump, the relationship there is like a father and a stroppy teenager, where Trump is essentially.
Who's the father and who's the stroppy teenager? That's what
So Trump is the father, they said,
Okay.
and Jerome Powell is the stroppy teenager, and Trump is demanding rate cuts. But the more he says it, the more he'll say no. So that was quite funny, and it's an interesting scenario because I see where he's coming from, and Powell has to look at the data. He can't be sort of polarized and be politicized in this way. He has to purely look at the data and do what's best for his mandate, really, and for the Federal Reserve's mandate, I would say.
Yeah, I think exactly that, Aaron. The sort of the situation at the moment, core inflation is still 2.8%, so we're still seeing those sticky services costs.
Even more so in the UK, I'd say.
I think that we can probably a good segue into let's take a look at what's happening in the UK.
I think it was 5.4 and it's in April, but it came down to about 4.5 in the May print, which was last week. I mean, it's improving, but I mean, 4.5 service inflation, that's a lot. I mean, it's sticky, it's annoying. It's not a rate you want to be rapidly cutting. It's not a level you want to be rapidly cutting interest rates in. I wouldn't feel, if I was a central bank, I would be looking at that and saying, well, let's keep as is until the data dictates that things are looking slightly better, because I think it's irresponsible to be basically loosening financial conditions and monetary conditions when you've got elements of inflation. That's their main job, is to keep a price level at a sustainable and acceptable level.
Yeah, and you've got food prices rising 4.4% in May, and this is on the back of stronger sterling. So if sterling was weakening to the dollar, we would see food prices even higher.
Yeah.
So there's some
food is obviously very, very inelastic. So people will pay, maybe apart from sort of extremely luxury items, but you're going to be buying your eggs and your protein shakes and your chicken, your chicken things from Tesco's, regardless if it goes up.
Sainsbury's, yeah.
Sainsbury's, yeah. And exactly, and I'll still be getting the meal deals and the little box chicken boxes. Even if it goes up 10 or 20p, and if that goes up, and you see that sort of take over on a mass level, then the price level is going to remain elevated and sticky. It's not an item where people are going to say, right, well, that's gone up 20%. I can live without it. I can't live without chicken or food, really, or sustenance.
It's interesting to note. I think so. One of the things that we saw, demand for new hires, unemployment rising to its highest point, 4.5% since so it's the highest point since Q3 of 2021. Economic uncertainty, we've got rising labour costs, also not much in the way of fiscal constraints.
In the UK.
I don't know if you want to touch on what the potential fiscal situation.
Yeah, I mean, we've had a Labour government for a year now, and they've sort of been very vocal about the £17 billion fiscal black hole, which they're looking to address. So they've got their hands tied from sort of a political and an economic perspective in terms of what they can spend, and that's why we've seen quite restrictive fiscal policy from the Labour government. A range of tax hikes, highest tax burden since the Second World War, and also we've seen tax hikes in the sense of the big one was the winter fuel allowance was taken, and I think that might come back.
And they're walking that back.
Exactly. So I mean, they haven't been the most accommodative in terms of giving fiscally to the British population. So they've got their hands tied a little bit, which is, I guess, what you were referring to in the sense that they can't do a 20% trillion dollar stimulus that the European Union is doing. And yeah, as you said, we've seen hirings at an all-time low in the UK. We've seen job openings falling, and we're seeing unemployment creep up a little bit. So the UK economy, another investment strategist said, it's anemic, it's suffering from anemic. It needs that extra bit of medicine to help it. It's not dying, but it needs a little bit of medicine to prop it up.
Yeah, got you. Let's any questions coming in through from our listeners? Nothing since Mervyn Jordan had mentioned some of the defence stocks.
We hope Kate Murphy gets back via Doha safely.
Yeah, and can't go wrong. The only way is up for defence stocks. Well, we will we'll save that, bring that back up in 6 months' time.
Yes, and on that note, we're at time. So thank you very much for today on our sort of latest macro segment where we're digesting markets. Martin, thank you. You're going to start today. And Trader Tools up next.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends! Welcome back to Trader Tools with the wonderful Jolie Lepselter.
Good morning. Hello.
It's good to see you.
Good to see you too.
Because last week was mental, wasn't it?
A bit mental, yeah, quite busy.
So tell us, just because our trader friends, some of them met you on Friday.
Yeah.
Tell us how it went on your side of things.
Oh, I loved it. It was so great. It was so nice to see some trader friends, meet new friends, people who may not know about options, people with some questions about just like the Tasty platform in general, or just about options in general. So yeah, everyone was super friendly and yeah, awesome. There's a lot of really good people out there.
I'm going to put up the picture of the beautiful Jolie there on stream. This is before the hordes came and, you know, inundated her with questions. But loads of you people came. We had Pelican, we had Julian, we had Away with the Numbers, loads and loads of people. So really wonderful to see you there. So today we have a treat for you. We have 3 very large stocks that we are going to go through. Some of them had a really good run in the last session. I'm sure you've seen markets have just completely bounced.
Yeah.
They continue to bounce this morning.
Yeah.
I mean, the read from the markets is that this so-called ceasefire is going to hold. What do you think? What's your
I hope so.
humble opinion?
I hope so.
Or do you think there's like a surprise waiting around the corner?
I mean, I mean, I hope that, I think the whole world right now is a bit fatigued. So I think for everyone's sanity, it'd be great to just keep the ceasefire going.
Right.
But, you know, you and I, you know what? You and I should be the new world leaders, I think.
We should,
Yeah.
We'll solve everything, right?
I think so.
With our trader friends at
Yeah,
the
there we go.
Cabinet
Yeah. No.
Congress.
Boom. We got it.
Let's start with Microsoft.
Sure.
And then we'll move on to Tesla and then to Netflix. So Microsoft, a really interesting one here because one that's giving us some really nice bullish signals. I'm going to try and zoom that in for you.
Yes,
and you can see here, we always say look to the left of the chart, and you can see that it has clearly broken out of levels last seen July 2024. And we're now encroaching on that $490 level. But also what I like to see here is that we have a clear, this is from a technician point of view, a clear uptrend there since that April tariff tantrum,
Yeah.
right? And we see more green candles than red candles, and we continue to creep higher. I've also put the RSI, the relative strength index, down at the bottom here.
Sure.
Because, you know, around that, 50 level is kind of like neutral. Then the higher we go, it becomes neutral to bullish. And then if we cross over that 70 line,
Yeah, it's broken out of that a little bit.
you know, it signals, you know, overbought. But this does not mean that you have to trade on that. It just gives you a heads up, right? It's like your heads up display in your car. So you can kind of look at this and trade it in two ways. One is that you can potentially, if you see this price action move towards the line that I've drawn there and then continue to bounce back up, you can buy on dips near support. Right? As long as it doesn't cross below that trend line that I have drawn there, and you can see right now just where my cursor is, just trying to show you, it's a bit difficult to talk and draw at the same time, but you can see that it's around that 470 level to 475. So if you see it drop back there and you think, okay, it's going to bounce back off that line again, you can buy on dips near support using stop loss orders just slightly below to manage your risk.
Yeah.
So how can we do this on the options front?
A couple different things, right? If you wanted to follow the RSI, right, and think, hey, you know, perhaps this is overbought or is approaching that territory, let me, you know, try to get a little bit of income and we could sell a covered call on that, assuming we already have the shares, right? If we already have the shares, say we bought them when Microsoft was at...
So it's now at 489 bucks.
489 bucks, yeah. Say we bought them at 485, right? We wanted a little bit of income. We wanted to ensure that we only sold them at a price that was higher than what we bought them for. We could sell the 487.5, right? Which would give us a little bit of income here. You see $305. And because options are quoted in hundreds because they reflect 100 shares of stock. So theoretically, you could capture that income. And then if for any reason they got called away, this was in the money, they'd at least be sold at a price higher than what you bought them for.
Nice.
That's one thing we could do.
Yeah.
This is a riskier strategy, right? Just a single-legged option. Or we could buy a call or buy a put, rather. So say, hey, I think that Microsoft tomorrow, or rather not tomorrow, it's only Tuesday. I'm normally here on Thursday. Say on Friday, we're like, oh, Microsoft is going to, you know, maybe stay neutral, maybe go all the way up to 487.5. We could theoretically buy a put option, and then if it's in the money, sell it. Although there's not a whole lot of time value left and not a whole lot of time to make a move. So if I was going to go long and buy a put, it may make sense to buy something further out and maybe lower the strike if I thought it was going to go down, if I thought it was overbought. Those are a couple things we could do with Microsoft.
Yeah, we have a question from Julian. Julian Masterda, can you explain anything about the order chains on the Tasty platform?
I can't explain about the order chains.
We also have a question. Answer Julian's first, but then after that, because everyone asks me this question all the time, why is the ladder the wrong way around? Why is the ladder
The ladder the wrong way around.
Yeah, the price. Why is it that the price? So if you go back to...
Do you mean this, the strikes?
Yeah.
Or do you mean like this is what I think you would mean because
the strikes.
Okay, so I changed it. I just have mine set up differently from the way Tom has his set up.
Yeah,
I change around all the time. It's just malleable. So I just, depending on who I'm talking to and what I'm analyzing, I'll just change it around. But it's not the wrong way. It's just a different way. It's malleable.
Why does Tom normally have it the opposite way around, where it, you know, when you go up, you think that the number will get bigger, but actually he has it the opposite way around.
Yeah, I'm not sure if it's strategic or not, or if it's just like, I like the way that this looks. This is what I'm used to. But I would reach out to him on that one. But yeah, this is just malleable. You can format it however you like.
Julian's question is, can you explain anything
order
about
chains?
Order chains?
So I can't explain about order chains. This platform that I'm using isn't a great example. We know that I'm using the UK one, right? And so because of that, it wouldn't be used to what I have in the States, just got here. So this account doesn't have a history. There's no trades on it. Because of that, it doesn't really show a whole lot. But order chains is going to show you all of your trades. So it's going to show, and you can search by symbol. So we're on Microsoft right now. Theoretically, if I had a ton of Microsoft trades in the last 365 days, it would show me a list of all of these. So it's a consolidated look at many things. Total profit and loss, average trade price. If we clicking these arrows, it's going to tell us more. Mark is going to be the mid price, cost basis, cost. It is essentially the same as cost, right? The amount that you used to purchase, or on the flip side, that you brought in if you shorted, the net lick, so the value of that position entirely, realized profit and loss, commissions, fees. So yeah, this is just a consolidated view of what A, has happened, so your past history, and B, unrealized stuff. So anything that you are still, any position you still got going on. So it's a consolidated look at, oh, hey, this is all what I've done in Microsoft, or, oh, hey, this is all I've done in Apple, so on and so forth. If you didn't want to use order chains, you wanted to be a bit more manual, you could pair up your history, which is going to show you all the transactions, mixed with your activity, which is going to show you all your trades, which would be, realized or unrealized. And this would be kind of the more manual approach, is to use both of these, whereas order chains is a consolidated view.
Also, we have next in line, and do let us know if you're finding this useful. Hit the like and subscribe button, people, because this show is all about community. It is for you, and we get up every day early, Jolie and I, and Rich as well, to come in and do this for you. And the more you give us and ask us, the more we can help you. Arsax, I see you. The German defense names like your Rheinmetalls, they are falling. Don't forget, they have had good runs recently, but also the NATO, everyone's waiting on what is going to come out of NATO later today. And of course, the expectation by the markets that the hostilities are not going to worsen, at least for now, is also putting downward pressure. But I have put a call out to the trading desk as well to see whether they can give me a heads up on volatility there. Let's have a look at Tesla now, because Tesla popped on Wall Street during the cash session yesterday, after that robo taxi. And just taking a look at some of the key technical levels, we talked about this earlier with Scotty Byrne as well here, and we are starting to see a lot of support coming in around 315 to 318. Right now, it's sitting pretty at the 357 handle and creeping up towards highs last seen around the 27th of May. Watch out for, let's have a look at where we were, scanning the left-hand side of the chart. It's always like the Beyonce song, to the left, to the left. To the left.
There we go.
There we are. You get music, you get, trade ideas here. What more could you want? What more could you want, trader friends? Our sacks, we'll get that to you as soon as we can. They are scuttling right now as we speak. But always bear in mind the areas of resistance and support. And if you look at where my cursor is here, we are looking at around, the 368, 370 level. If you're looking at a short, then perhaps, look towards the area of resistance at around 315 there. Don't forget, Tesla is a very, very volatile stock. At the moment, if you look at the moving averages, I'm going to whack that on for you. Moving averages, I like using just to give me an overall view of where this sits. Currently, the price action is above the 50 and it's above the 20 and it's above the 100 as well, suggesting bullish momentum. But don't forget, it's very volatile, and we have Tesla earnings coming up soon. So on the options front, take it away.
Yeah, if the bulls are in charge, as you'd say, a couple different things we could do. In this instance, hey, maybe we want to, instead of sell, maybe we want to, try to take advantage of a big move. Earnings are coming out the 22nd, July 22nd, correct? Yeah. So say we want to take advantage of that move right before earnings. People may have a bullish sentiment as well. We're like, hey, let's join the party. We could theoretically buy a call option right now, or the way Tesla closed, it was around like 357, right? So say, hey, this guy's just gonna keep on climbing up. We could theoretically do something fun like buy an in the money call, or close to in the money, 355. That would allow us to buy the stock at a cheaper price than what the market could offer, especially if we think it's going to keep on climbing. But because we are clever traders, we know we don't have to take assignment. We know we could also just turn around and sell it for a profit, right? So that would be one way to look at a bullish view for options. That would be more conservative because you are buying the leg, you call the shots, you've got autonomy. Conversely, you could sell a put option, and that would allow you to buy the stock at a lower price too. So say, hey, we are still interested, we could, sell a put at 355, then we could buy the stock at this price. Wouldn't be mad at it, if Tesla ends up climbing and we get a nice little premium. This is, of course,
all about collecting premium.
Yeah, of course, pretty risky strategy. We could theoretically hedge, right? And do something like this, a credit spread. But then, we'd get a credit of $282. We could have some not pin risk, but pin risk does exist. That means when the stock lands in the middle of the strike, so maybe your short option gets assigned and you don't have the back one for protection. This is our first time really talking about a spread. People like spreads because you're hedged. It's theoretically could lead to less risk, right? We do like to think that, but there's just options are inherently risky.
I like less risk.
Same, me too. So say like in this instance, this guy expired in the money, you would be buying at 355, selling at 350. That's a $500 loss. If we get a 282 credit, we would take that loss, subtract the 282, which would bring our loss down to like 212. But say we're right, or say we're wrong. Say we're wrong and this guy is out of the money, or this in the money. That's when we'd see that loss come through, right? If Tesla did a big nosedive, Elon did something really naughty, this could be a successful one, right? If it just expires in the money or out of the money and then we get to keep our credit. That would be like the dream scenario for all short strategies.
Elon makes another boo-boo.
Yeah,
and then you get to
take advantage.
Take advantage of it. Also, the interesting thing, which when Bat was here last week, he talked about this a great deal. And for those of you like me, very new to the space, the whole kind of having your mind around not freaking out when you take assignment. Because for most people, that's a new thing.
Yeah.
Right?
Yeah. The psychology of trading, I mean, it can look super scary. Like if you see your option or just your buying power is really negative because you got an assignment. Yeah, that could be really scary. But know that 9 out of 10 times the stuff is resolvable, and all you need to do is sell the assigned. Yeah, exactly.
So we got some cool questions coming in hard and fast now on the chat. We have David Boise asking, can you explain a bit around selling options and the capital required to do it versus buying options? That's a very good question.
I can talk about that. Yeah. So it depends on what we're selling, right? If we're selling a single-legged option, then that is going to we're going to ask you to uphold a lot of capital, right? Because at that point, you don't call the shots, anything can happen. If you are selling a spread like I just showed, what that would look like is it would be the width of the spread minus the credit that you got in, right? So that would be a $500 loss, the example I just showed. But if we subtract the premium you got, we're only going to uphold the max loss for that, for example.
And also, Boise asking, to cover the potential loss, is this where you need a margin account to help cover?
Correct. Yep, you do need a margin account. Just because you have a margin account doesn't mean you have to borrow on margin, but you need the capability to borrow if for any reason you do take assignment.
There is a very key thing and an interesting thing too, which I spotted and thought, this is interesting.
Yeah.
Because on the spread betting and CFD side, if you make a loss, it's a negative number. But I think on the tasty side of things, it's a bracket. Is that right?
Yes.
Yeah.
Exactly.
So just bear that in mind. There is a difference. And see, I was paying attention during the 5-day course, intensive.
Yeah.
Intensive.
Yeah.
Yeah. Christian Malmat took me through it. And I was like, what is that bracket?
Yeah.
Mervyn Jardine, great seeing you on Friday. Saying, David, go into Tasty and Mike's whiteboard. You don't want to do this unless you have comprehensive training or you will get burnt. That's right. So always have your guardrails, especially when you're starting out. Just start small. Make sure you don't leave anything uncovered. And Mike's whiteboard is a really good one. I spoke a great deal to Julian as well. He was saying, out of everyone, I was going to tease Bat about it. He said, out of everyone, his favorite was Nick.
Oh. Sure.
Right. Yeah, there's lots of training course on the site, and it's a must-do. You also need a margin account to make it worthwhile, and no one will give you one unless you do a test. That's right. Make sure you drink 4 espressos before doing the test. I did the test at 4 p.m. after being awake early on. R. Sachs saying, Ange, can you show the strategy Dylan was talking about for oil? We're running out of time, but I can send you, R. Sachs, I've got your email. I can send you the actual section where he talked about it. So I'll do that right after the show. Let's quickly go on to Netflix. Are you a Netflix subscriber, Jolie?
I am.
I am an ex-Netflix subscriber.
Oh, really?
Yeah, because
what happened?
I got suckered in $9.99 because I was late. I didn't want to have to do these monthly charges, and IG keeps me busy enough. My trader friends, the most important things, I don't have time to watch films.
Of course.
So then I signed up, and within 3 months they pushed up to $16.99, and I was like not happy with that.
Yeah.
So Netflix, looking at that there, and it's a good thing I've already got my moving averages in, because as you can tell with this chart as well, we're seeing bullish. The bulls look like they're in charge. And we have resistance near the all-time high around, 1260 to 1265, but we've surpassed that as well. Looking at volume and volatility, volume is tapering off right now, but still a good amount of volume. Taking a look at this, if you one way of trading this is if you buy on pullbacks to support to the moving average, that moving average which is a 20. So it looks like it keeps trying to get higher, pulls back, tries to keep going higher, pulls back, right? So you can buy on pullbacks to support. Don't chase in overbought conditions though. That's one thing to keep in mind. So how can we play this using Netflix and the option side of things as a hedge?
Yeah, as a hedge, I mean, yeah, if we wanted to protect our shares, right, we wanted to make sure that we were able to sell them at an appropriate price, considering, well, if things are still going up, you know, there's still bullish outlook, we wouldn't need to protect in that regard, but say, hey, you know, Netflix, they just keep on rising the prices, there might be a downturn, we could buy a put option. Let me see, Netflix here, there looks like they've got some stuff coming up as well too. So say we want to move to July 11th, just before we see some earnings roll out, and we could say, hey, I want to protect these guys. I bought these shares when they were all the way down at $12.40. I really don't want to sell them at a loss. So theoretically, you could buy a $12.45 put, but you know, you have to be cognizant, hey, how much is this really going to save me? Because it's going to cost me $2,195, and if I'm just trying to save about like $500, that doesn't really like make a whole lot of sense, right? So say, hey, that's too expensive. Let me also sell a put just to bring it down a little bit, right? I'm just going to move it up here. So sorry about that. Okay, cool. Yeah, this is what I want. Let me sell a put too. I wouldn't be like terribly mad about buying like more shares at $12.50. But if I only had one side to deliver, right? That means if I already had it covered on the put side, this wouldn't be like a true hedge because it would leave the like long by itself, right? I could theoretically, if I had 100 shares and then I was gonna sell them with this long put and then this guy was a hedge, I would still be on the hook to buy 100 shares at $12.50. So that wouldn't be an appropriate strategy necessarily. So I could buy just a put option with the original plan. This one wouldn't really make a whole lot of sense for me though. If I had was just trying to save like $500 and it costs like $2,000. So conversely, we could always sell a call for something comparable. We'd get that coming in, the $3,190. We may have to forego our shares, but we're going to have a nice credit coming in. It really just depends on your goal. Is your goal to protect the price? Is your goal to get this income? Trying to lock in the income and a strike that you're okay to sell at. So definitely circumstantial, just dependent on if you own the shares already or if you just want to speculate on the movement with options itself.
Also interesting thing that you need to consider is that, you know, Netflix has been doing well recently, and also it is trading at a premium. Its earnings, as you were reminded by Jolie, is July 17th. So pay attention to that. If you don't like a lot of volatility, maybe come out of it beforehand, or, you know, make sure you've got your hedge in place. We've got a coming up slide to look ahead to tomorrow. So we have myself and Luke more tomorrow to cover overnight action and opening bell and fast markets as well. Charting crypto, Axel Rudolph will be back for that. And then after, we've got all sessions with me and Rich McDonald and Michael saying that's a play out. Love that new graphic, producer Phil. That circular thing is new.
It does look nice.
Yeah, and Talking Shop talks AI. This is a very, very cool one because I've watched it. Luke Moore and Ronnie Agnick telling you how to simplify, and make your trading smarter by using all these cool AI tools.
Yeah, why not?
Yeah. Just get someone to do the legwork, which is great.
Please.
Take it away. But fantastic having you guys on. Don't forget, Rich is going to be in Milan, and producer Phil is going to be on holiday. He's boarding his EasyJet flight really early tomorrow morning.
Sure.
So I am counting on you people, trader friends, to be with me Wednesday, Thursday, Friday, and we are going to rock and roll and make it even better. Julie, if you're in, come on board as well. It'd be lovely to have you.
Sure.
Right. We'll see you bright eye and bushy tail tomorrow. See you soon.
Bye.